Ladies and gentlemen, good day and welcome to Rico Auto Industries Q1 FY26 conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Hazel Rathod. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone, and thank you for joining us for Rico Auto Industries Q1 FY26 earnings conference call. From the management, we have with us Mr. Arvind Kapoor, Chairman, CEO and MD, Mr. Kaushalendra Verma, Executive Director, Mr. R.K. Miglani, Executive Director, Mr. Rakesh Sharma, Chief Financial Officer, and Ms. Ruchika Gupta, Company Secretary. I now request Mr. Kaushalendra Verma to take us to the key opening remarks, after which we can open the floor for the question and answer session. Thank you, and over to you, sir.
Thank you. Good evening, all. This is Kaushalendra Verma, Executive Director, Rico Auto Industries Limited. I am participating in this call from the Rico Corporate Office Boardroom, along with our Chairman and Main Director, Mr. Arvind Kapoor.
Good evening.
Our CFO, Rakesh Sharma.
Good evening.
And our CS, Ruchika Gupta, along with other colleagues.
Good evening.
Yeah, to start with, we have a very positive news from the market with respect to our GDP growth. IMF has raised India's economic growth forecast to 6.4 for 2025 and 2026, up from its earlier projection of 6.2 and 6.3 respectively. With this declaration, India retained its position as the world's fastest growing economy. The revision is based on more favorable external environment and resultant domestic conditions. Whereas the global growth projections to 3% in 2025 and 3.1% in 2026, RBI maintains the repo rate at 5.5%, and the retail inflation in India slipped to 1.5% in July 2025, the lowest since June 2017, and below the Reserve Bank of India's comfort band of 2 to 6%. China growth is still at maintains 4.6 in 2025 and 4.2 in 2026. Also, the US is expected to grow by 1.9% and 2% in 2025 and 2026 respectively. India's contribution is about 18% of global growth, which is more than the US contribution, which is around 11%. India-UK trade agreement expected to significantly benefit the Indian automobile and auto components industry with the tariff-free access. We are keeping a close watch on the tariff, US tariff issue, and evaluating our position with respect to our customers on regular basis. We are able to conclude with our key customers in the US on the recent tariff implications, and we are in constant touch with them on the progress which move forward on these tariff issues. This quarter, we have done a revenue close to 543 plus CR, which is similar to the previous same quarter previous year. In spite of that, there is a slow volume production at our OEMs, including Maruti and Hero. But because of the larger share of business which we maintained or we won in the last year, we are able to maintain the same revenue. Our cost control efforts, which we are doing since last couple of months, has resulted into a much increase in the profitability in this quarter, and subsequently these efforts will result into the more profit and as our revenue goes up in the subsequent quarters. Just to give you a figure that if we talk about year-over-year performance, the automotive market has regrowth by 3.5%, but we have grown by 1.4%. If we talk about the four-wheeler market, then the four-wheeler market has regrown by 1.4%, and whereas we have also regrown by 1.9%, but in the two-wheeler, we have grown 4.4%, where the market has regrown by minus 6.2%. The key products on which we have made the significant volume progress is on the alloy wheel and the EV and the hybrid components and the pump business which we are doing with our key customers. I would request Rakesh to take you on the financial numbers.
Yeah, this is Rakesh Sharma, Chief Financial Officer from Rico Auto. Regarding the numbers, like Mr. Kaushalendra Verma has briefed you about the numbers, one significant part that is there is that our profitability has trebled as compared to the same quarter last year. So that is a very encouraging part, and we are quite hopeful that this improvement in profits will continue. Especially on two fronts. One is that our utilization of especially the ferrous components is going to increase quarter on quarter. And there we will be able to utilize our existing capacities which are available with us. So that will result in profitability improvement. And along with that, our efforts on cost front also are yielding results. As costs have come down, you would have noticed that our top line has maintained almost equivalent to previous quarter and as well as same quarter last year also. But our profitability has increased. This is on these two fronts. So basically, cost saving has also resulted in this, and so this way we are quite confident that our profitability should keep on increasing, and we are in line with our target of achieving 12-13% of EBITDA margins. So quarter on quarter, this should keep on improving. That is our hope. And apart from that, the same thing is reflecting in our EPS also, which is 1.24 this quarter as compared to 0.54 last quarter and 0.42 the same quarter last year. So that way this is all encouraging. And the revenue part also, wherever some of our customers have degrown, but we have been able to push our growth through other products and other customers. So that is also encouraging. As far as Mr. Kaushalendra Verma has already spoken about US tariffs, so there also we are keeping a constant touch with our customers, and with some of the customers we have already settled in our favor as far as whatever has been finalized by US, and whatever development happens in future also we'll keep our contact with the customers, and accordingly we are quite hopeful that there also we should be able to get amicable solution for the same. And I think now we should be open for queries. Yeah.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star then one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and then two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, participants, if you wish to register for a question, please press star and then one.
While we're waiting for the question, this is Arvind Kapoor, and I'd like to add here that we did write to the stock exchange regarding our involvement in railways. The work has started, and we started delivering indirectly at the moment, but we are also registering directly with the DRDO, with the RDSO. And so there is a lot of progress that is taking place, and I think railways will grow pretty fast now. And as far as the defense is concerned, we are delivering the shooting ranges that we had mentioned last time, and we have a license for those. And those get dispatched in batches of 25 or 30 or 10 or 15, depending on. Now, because of the rains, the dispatches were stopped primarily because where they are to be kept, those places were flooded, and so we could not deliver. We were asked not to deliver. And but we are collecting and we are manufacturing them, and I think next quarter onward we start delivering all the containers to them also.
Thank you. A reminder to all the participants, you may press star and one to ask a question. Our first question comes from the line of Praful Rai from Arjav Partners. Please go ahead.
Yes, sir. Hi, this is Praful. I have a few questions. On the margin side, when we said the margins will increase to 13%, what is the time frame you have in terms of margin getting to 13%? In case, can you give us some sequential update? That is one. Second question is on the revenue composition. Is the margin expansion happening because of increasing railway and defense work, which is leading to a better margin? That is second question. And third is on any outlook on the growth side of it, especially given that US tariff impact is there on all auto components in some way or the other. So can you just throw light on these three or four things?
Okay. Regarding the projection of margins, it is we are hopeful that by the last quarter of this year, we should be able to achieve these figures. And at annual level also, next year, definitely it will be there. But on quarterly level, we should be able to achieve it by the end of the year. And whether these are coming from defense and railways, these are currently not coming out of railways and defense, because our business is very less. Railway has just started, so it is negligible right now. But both these sectors are good margin businesses that we'll be getting. So in future, this will definitely help us improve our margins. And regarding the US tariffs, like we said, that US tariffs, there are two factors that affect us. One is the demand for Indian products when tariffs go high. So one good part in our case is because we supply to our OEMs only. We are not there in the aftermarket or general public market. We are not there. So OEMs, we are in constant touch, and whatever was increased earlier, for that we have already settled with the customers and they are bearing the cost. And in future also, we are keeping constant touch with the customers. Whatever developments happen, we are quite hopeful that we will be able to settle this amicably with our customers and should not impact us negatively.
The development is all.
Yeah.
So in terms of growth outlook, that is one.
In terms of growth, if you have gone through our earnings release, we have given our order book that is pending for execution is already more than 1,000 crore per annum. At peak level, this is the business that is already on, and every quarter we are adding to those businesses. So growth is going to be good. And and as far as export thing is concerned, or US tariffs on our growth, we are quite hopeful that because we are keeping contact with our customers and they are assuring us that they will continue to buy from us, because in our type of product, it's not easy to introduce new vendors. It's a time-taking proposition. So it takes 2 to 3 years. And lot of cost and lot of testing, etc. A lot of certifications are required to be there. So it's a kind of hindrance for changing quite frequently the vendors. So that should go in our favor.
So see, in effect, you are saying
rapport with our customers, yeah.
See, that is so there, sir. The Rico has been an old established company, so I don't think we'll have a problem in having some rapport. My question was, suppose we continue with this higher level of elevated tariff, given that our product is a critical product to what they do, do you think we'll be still able to get through some kind of supply through some channel or whatever?
See, we will also, this is Arvind Kapoor. We will also look at alternatives, like to give an example, the garment industry, a lot of them have started setting up in Vietnam and other places, so that the goods go from here to Vietnam and there is duty free, and from there it is repackaged and sold further. So we'll also look at alternatives as to, but we will not let our customers down, and we will not let the business go. And the new businesses are at much better margins than before. And your question that the better margins going up is not because of defense at the moment or the railways. It is mainly because of the new products which have been introduced and also the cost cutting which has happened. And railways and defense, once they both cross about 100-150 crores each, they will contribute sizable to the profitability also.
If I may be allowed, can I ask one more question?
Yes, please.
Yeah. See, by Q4 FY26, what proportion of our revenues are likely to come from defense and railways put together?
At the moment, these are many tender businesses, so it's very difficult to predict. But this year, I think we are estimating around 80 to 90 crores. That's what we had budgeted. And but these are little. We are pushing a lot, and let's see what happens.
And sir, next year will this number be much higher than this?
Next year, we will be entrenched in the railways, and our setup would be there, and we'll be utilizing the current capacities as well. And next year, so hopefully, we'll be almost double of that.
Oh. So one question probably we didn't get answered. The growth side of the one question probably as the overall growth, we said we have 1,000 crore order backlog. What it translates to the current year revenue, some kind of estimate which we may have?
Yeah, no, we have that estimate.
Over 2,600. 2,600, sir. Over 2,600.
नहीं, every quarter कितना add हो रहा है?
This year we will add around.
This year 156 इसमें add होगा.
Yeah, and this year there's an addition of 156 crores of the new businesses. And next year, the same business translates into 550 crores, and the year after that is around 800 crores.
And overall revenue estimate for the current year 20. Yeah.
In 25-26, we add 156 crores to production.
Correct.
Out of the new businesses. And okay, this is the business that we've declared. Having said that, we are also picking up other businesses which are immediate for the two-wheeler industry and the other industry, where we are taking a larger share of the business and or we are taking adjacent businesses. So that is also being added, but that has not been included in this. But this year, our estimate is 156 crores. The only issue that comes here is that our turnover would have been much higher had the magnet issue was not there. Maruti and others were to introduce many new vehicles which got delayed. Now they've been introduced, and now hopefully those whatever goods that we have developed, they'll ramp up faster.
And sir, this year as a whole, we'll end up doing 2,600 kind of a revenue, and next year we build on top of that.
But unless something drastic happens, this is what the budget is, and budget is based on the confirmation that we have from all the customers.
Okay, sir. Thanks a ton, sir. Lovely. Thanks a ton. And congrats for a great set of numbers.
Thank you. Thanks so much.
Yep.
Thank you. Before we take the next question, a reminder to all the participants, you may press star and 1 to ask a question. Our next question comes from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello. Am I audible?
Yes, ma'am, you're audible. Please go ahead.
Yeah, just one clarification. So the new businesses top line that you mentioned, 156 crores, that is from railways and defense. Is that correct?
No. What we're declaring here is the business that we've already confirmed with our OEM partners, India and overseas. These are the new business that we got for the auto parts, auto components.
Okay, and what sort of revenues do we expect from defense and railways for this year, FY26?
I just mentioned that we are estimating around 80 crores, and that's what it all depends on the tenders and how soon the government wants to pick up the material.
Okay, and the registration with the RDSO, when do we expect that to happen?
That I think by the third quarter, I think we should manage to get our registration for. Say in RDSO, you got to get almost any new product you develop that needs to be registered there. So we'll be registering ourselves again and again. For the first product would be by the end of this Q3, and as you pick up new products, there we'll keep on getting a registration done.
Okay. And the last question was on the land monetization. Do we have any updates on that?
At the moment, discussions keep on taking place, but if I tell you that till my shareholders don't benefit by it, we are not going to monetize the land. I think there should be a significant benefit to our shareholders, and that's what we are working on. At the moment, I did mention last time that there was a pittance that was being offered. The total saving would have been just about 400 crores or something, and savings after the shifting of equipment and everything. But we are looking for at least 1,200 crores for our shareholders.
Okay. Yeah, that is it from my side. Thank you.
Thank you. A reminder to all the participants, if you wish to register for a question, you may press star and 1 now. Our next question comes from the line of Praful Rai from Arjav Partners. Please go ahead.
Sir, thanks Atan for taking my question again. This 13% margin which you are talking, hopefully we'll be able to achieve in the quarter 4. Now, when the next year your railway scales up as we spoke of and some defense also happens, what will be the steady state margin we can end up having, say, next 2 years? Because the composition is also getting better.
See, they will add to it at the moment to predict how much would be the contribution. I think we need to wait and watch, and once we get into production and into mass volume, that's the time we'll be able to tell you. Probably in the first quarter of next year, we'll give you a good indication as to what the railways and the defense are going to add to the profitability.
But at some blended levels, sir, it's a little higher than what it is, right? Our steady state margins to have
to give you a very broad picture, railways and defense, the profitability is all 20 to 30%. That's what the range that one works on, and because sometimes the payments get delayed, so that's where the levels are. Now in that, now we are also waiting and watching, and so once we get into it, start supplying, we'll be able to improve there. But having said that, let me tell you, the new components, one of the reasons that the profit is going up is also because of the introduction of the new components which are coming in. They are a much better margin than the earlier components. So that is the other add-on which is also there.
Right, sir. Right. Thanks, sir. Thanks a lot.
Thank you. Participants, you may press star and 1 to ask a question. A reminder to all the participants, if you wish to register for a question, please press star and 1 now. Our next question comes from the line of Mohit Jangir from Invid Research. Please go ahead.
Yeah. Hi, sir. First of all, congratulations on a good set of numbers. So I had one question on the guidance that we are giving this year. So to do 2,600 crores of turnover, I think in the next 3 quarters, we will have to achieve a revenue run rate of roughly 700 crores. So how confident are we on achieving these numbers, and will it have any benefit to our EBITDA margins, because operating leverage will also come into play?
See, if I tell you what has happened in the first quarter, we actually are because of the magnet shortage and the introduction of the new component which did not come in because of the magnet shortage, we did lose about 30 crores of revenue, 35 crores of revenue. And now the ramp up has started to take place, and for the second quarter, we are hoping that we'll achieve the budgeted figures that we had. Now, 2652 is the budget that we declared to our board. And that's what we are working, and quarter by quarter, that's the board is monitoring. Now, all depends on the introduction of the component. We are ready. The development has taken place. We are ready for start of production. And if there is no hiccup as far as magnets are concerned or any other shortages created for the domestic market, we are fairly confident that we'll be there. At the moment, in the first quarter, we are 35 crores short, and which hopefully we will recover. We have picked up new orders around the same figure, about around 25 crores, which are an add-on to whatever the other figures that we had given to you earlier. So we are, if we lose something, we try to gain from somewhere else, either by getting a larger share of the market and or winning a new business, which can start immediately. Any new product to be developed, these products get developed for now. The products which are being introduced this year were developed last year and the year before last year. So that's how the productions are coming up now. And next year, the add-on is where the developments have already taken place, samples have been submitted, and the approvals have already come. And that's why we are confident that next year there should be an addition of 550 crores in the revenue. In the third year, 27-28, we are saying 800 crores. That is some of the components, the development will start by the end of this year and in the first quarter of next year. And the peak revenue will come in the year 27-28. So that's how the development is taking place.
Okay. And sir, what is the update on our Hosur facility? Is it on time? And
you want to say something?
Yeah, our Hosur facility is well on time, and the building is under construction as per the time plan. And we will do the first SOP from our Hosur facility in the Q1 of 2026.
It's as per plan.
Okay. And sir, in the earlier Concall, we had guided for the capacity utilization in our foundry division to improve from 50% to 60-65% in gray iron and 62 to 75% in aluminum. So what is the status on our foundry utilization right now?
It is absolutely as per the plan. In fact, if you look at the orders that we got, normally, if I give you the split of aluminum and iron that we have, our aluminum business is around 85%, and 50% is the iron business. And now the iron business will go up to almost 24-25%, and aluminum business would be 75%. There's no degrowth in the aluminum business; that is also growing, but the share of business will change. And when we are touching 25%, which is by next year, actually end of next year, we will be almost 90% of utilization of our foundry, which is going to be one of the best turnarounds that we would have ever had. And that will have a major impact on the profitability.
Okay. Okay. And sir, I think you have already touched upon the lens cell part, but what is the indicative number that we can expect from that? I think it was roughly 1,000 to 1,500 crores.
On?
Can you
repeat the question, please?
I was asking any indicative number that we can get from the lens sale, which the company can realize.
No, I indicated that till we make enough money for our shareholders, we are not selling the land. And the last offer we had, we were saving about 400 crores after the shifting and everything else required to be done. And we thought that was not adequate, it was not worth the while to do it. And our target is between 1,000 to 1,200 crores profitability that we should get on the sale of land.
Okay. That's it from my side. Thank you.
Thank you. Participants, if you wish to register for a question, you may press star and 1 now. A reminder to all the participants, you may press star and then 1 to ask a question. Our next question comes from the line of Akshay Verma, an investor. Please go ahead.
Hello, am I audible?
Yes.
Yes, thank you for the opportunity and congratulations on the good set of numbers. So my question is regarding the defense. So would you like to provide any guidance for the defense sector for the next quarter and for this year?
This year, the adjacent businesses that we are looking at, that is defense and railways, we are targeting a figure of about around 80 crores. That's what we have included in our this year's sale, and we are hoping to achieve that.
Okay, great. And also regarding the capacity utilization, so for the FY26, is it like expected to rise to around 60 to 65% in gray iron?
Yeah, 60 to 65% by the year end, yes.
Yeah. I think hopefully we'll cross that because a lot of development is taking place.
Okay, great. And also regarding the export orders that is expected to ramp up, so you wanted to know more about that.
Yeah, we have one significant business for our iron foundry from the export side. and those programs are under development currently, which will go into the SOP this year, and some of them early Q1 of the next year.
The peaking takes place next year.
Next year.
Yeah, the peak sale will happen in next year.
Okay, yes, sir. Thank you so much. That's it from my side.
Thank you.
Thank you. Participants, you may press star and one to ask a question. Our next question comes from the line of Pranav from Prudent Equity. Please go ahead.
Yeah, hi, sir. My question was, what can be the average tax rate I can expect for the current year or moving forward?
In Rico Auto case, it will be 25%.
Sorry, cut off.
26.34% better after including surcharge and all. So it will be in that range. And for Concall, it will be a little higher because we have merged our RFL, which was paying taxes at 25%, with RJWL, which was paying at 34%. But one fortunate part is that this will be a tax rate, but we have accumulated losses there. So actual outgo tax front will be less. So in cash flow, you will see less outflow on cash on tax front, but rate wise it will be at 34%. Means
so consolidated, it will be around 34%.
Concall will be less now.
Only on Jinfy it will be at 34%. So Concall should come at around 29% or so. Concall.
Okay.
But standalone it will be 25%. Yeah.
Okay. Yeah, that clears up. Thank you.
Thank you. Our next question comes from the line of Bhaskara, an investor. Please go ahead.
Hi. Thanks for taking my question. Any further deferred tax benefits are expected in Q2 or Q3 because of the merger?
Yes. Only thing is that our accumulated losses will be utilized. Other than that, not much profit. Whatever profit is there, that we have already gained. Because in new scheme there is no deferred tax thing that is going to be there. Additional.
Okay.
So it is stabilized at 6% only.
Okay. Do you expect to maintain the current net profit levels in the coming quarters? Not on the revenue side, I mean net profit.
Our target is very clear.
Okay. So in the future quarters, definitely you're going to have at least minimum 10 crore plus net profit, right? Just for the guidance.
Sorry, your last sentence was not very clear.
Minimum 10 crore profit.
Sorry?
Sorry, can you please repeat your question?
Do you expect to maintain the current net profit levels in the coming quarters? Like previously, last year we have got around...
We are hopeful of improving it quarter on quarter.
Okay. So we can expect above 15 crore kind of consolidation profit, right? Net profit.
Yes.
Okay. One last thing from my side. Could you share how many components the company is planning to register going forward in a railway?
How many components?
Yeah.
We currently are supplying in the range of 600 to 700.
No,
Railway, sorry. I got complete.
I think the railways, the development that has already taken place and some deliveries that taken place is almost about, basically the initial samples and everything. It's about, I think, 24 or 25 if I remember correctly. And these are mainly cast components and the ferrous foundry is utilized fully on this. And there are another, I think, 13, 14 components which are under development for supplies to people who are already registered with RDSO and supplying to the railways.
Okay. Any new bids that we participated for defense side other than the ranging containers? Any other?
Yes, there are a lot of things we are participating in, and a lot of even for the BrahMos we will be participating.
Okay, sir. Okay. Yeah, that's it from my side. Thank you.
Thank you. Participants, you may press star and then one to ask a question. A reminder to all the participants, if you wish to register for a question, you may press star and then one now. Our next follow-up question comes from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello. Hello.
Yes,
Hello.
ma'am, you're audible. Please go ahead.
Yeah, you just mentioned you'll be participating on the BrahMos side. Could you elaborate what sort of components are we going to be supplying
This is a very
there?
secret project. We cannot talk too much about it.
And are these products in development phase, or they've been developed and we're going to be bidding for the tenders?
Discussion, no, at the moment, it's in discussion stage.
So the products haven't been developed. Is that correct?
No, they haven't been developed. They are under discussion for mass volumes.
Oh, okay. Thank you.
Participants, you may press.
Well, what I wanted to say was we are registered with them, and there's a lot of exchange of information that's taking place.
Thank you. Participants, you may press star and then one to ask a question. A reminder to everyone, if you wish to register for a question, please press star and then one. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Yeah. Thank you, everyone. I think as we discussed during the question hours and what we are projecting that we will continue to win more businesses from our customer, and there are a lot of business which is in process currently for the launch, which will significantly improve our revenue run rate in the subsequent quarters. And our profit margin will be much better with respect to the current quarter going forward, as we will be launching the new programs and continue to work on our cost control. Thank you so much.
Thank you. Thank you, members of the management. On behalf of Rico Auto Industries, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.
Thank you so much.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.